Uncertain times are ahead, and today we will discuss how China is winning against the US, but their economy is definitely still suffering. You came here for the truth, so let me unveil that for you. I want to get into a bunch of different information today, and we'll begin with China. Look at this right here. The shock decision by the UK to defy its closest ally, the US, and join the China-led Asian Infrastructure Investment Bank lays bare on how old strategic alliances are being seriously challenged by China's economic rise. So we have this Asian Infrastructure Investment Bank. Then you have the sort of BRIC nations that led their own creation of their own bank. And they're essentially saying that they want to do away with the power that the US has. As Prime Minister Tony Abbott's government contemplates overturning its original resistance to join the bank, it is a timely opportunity to reflect on how the U.S. handles the ascension of China and the Obama administration treatment of longtime Western allies like Australia. So this obviously, like I call it, the ripple effect goes into these other nations. Very big information, but I want to move on. Look at this here. Chinese and Japanese holding of U.S. treasuries, and we could see that they're now tied. China has been slowly but surely declining here on the amount of treasuries, and Japan has in fact been increasing. They are printing up money and they need places to put it. So, of course, they're going to buy U.S. treasuries. It's a simple buy. But this is interesting to note that China has been slowly but surely selling off here. What I wrote about in my book was talking about the fact that China owns tons of these U.S. treasuries, U.S. debt, essentially. China literally holds the future of the U.S. in their hands, and this could mean disaster for the U.S. And essentially, I continue on here, but they are only able to fuel the bubbles because people are buying up their debt. And this goes for any nation. When they're buying up the debt, obviously you can continue these schemes, but when that slows down, you run into some trouble, and that's happening right now. Look at this right here. China's trust firms with total assets 2.2 trillion are shifting more cash into the frothy capital markets and the over-the-counter instruments. Oh, how I love those. Instead of loans, blunting regulators' efforts to reduce shadow banking risk. This article is out of Reuters. By redirecting money into capital markets and OTC products like asset-backed securities. Oh, asset-backed securities, those derivatives are certainly wonderful. And bankers' acceptances trusts are acting less like lenders and more like hedge funds or lightly regulated mutual funds. And these are the kind of things that keep exploding. And what happens when they expand? Eventually it gets to a point and then it crashes. And this is going to happen again. It's pretty obvious. You don't need to be a genius to see that every time they relax the rules, you have problems. And this is happening right now in China, as they're expanding upon what they are doing here. Let's move on to this article. The cost of borrowing in China's interbank market is the most expensive on record for the start of the year. That suggests the central bank isn't finished its easing policy. So at the bottom, reserve requirement ratio will perhaps be cut this month, according to the Barclays, in the coming weeks. Whether they do this or not, remains to be seen. But we could see that literally hundreds of times, the central banks have eased on their interest rate policy. They've also relaxed all of the different ratios, reserve requirement ratios. They've basically relaxed on all of their lending practices. Why? Because the economy started to slow down. And instead of allowing it to slow down to a natural level, they simply pumped it up. And that's what you need to do if you're a central banker. If you see a bubble, you pump it up and pump it up. And when it pops, just make sure all of that money gets put into the next bubble. And that's exactly what they're doing. This article is out of Bloomberg, but I want to move on to this one out of Reuters. China displaces Germany as world's third largest arms exporter. Can you believe that? They're essentially being really climbing up in every single category. And obviously the military-industrial complex has such a hold over all of this and all of the wars that take place around the world. I'm going to move on. Here, I wanted to move to the US, in fact. Employment to working age population 16 to 54. Look at the decline. And they're sarcastically saying, yes, almost back to full employment. This chart goes all the way back to 1976. You can see that at the year 2000, it was at the highest it had been, and then it has been declining ever since. You could see this with the civilian labor force participation rate statistic from the Federal Reserve, if you want to see that as well. And this goes to show the exact same information. There is terrible levels of employment, but the central bank in the US, the Federal Reserve, the US government, and all of the connected countries around the world are doing these same policies here, and yet they are failing. So obviously this is a problem. Then we look at Italy. Look at their GDP. Look at their Italy bad debt. Their bad debt is climbing so rapidly right now, and Italy's GDP is suffering even though they're including illegal conduct as part of their GDP. And then at the bottom, just showing you Italy's bad debt to GDP ratio, of course, increasing every single year. And that's going to continue. And the policies that are put in place are obviously only going to make it worse. For the Federal Reserve, patience may no longer be a virtue. Now, this is a little bit of humor for me here. Surrounding the Fed's policy meeting this week, it is widespread expectation that it will no longer use the word, quote, patient to describe its stance on raising interest rates from record lows. So we have them using this word patient, and they're making such a big deal about it that literally the words that they choose are going to mean all the difference in the world. That's how serious the situation is right now. They hang on to every single little word that the Federal Reserve said. If they say this word or if they don't say the word, it's going to make a big difference in the markets. That's how fake these markets are today. Let's look at this here. Very interesting information. This is out of the unitedrepublic.org, and essentially goes into an ordinary American invests one blue chip stock, and then you look at the return on investment, 11%. And then you look at oil subsidies, tax breaks, drug prices. Look at all these different things, and you could see how crazy it is when you have these big lobbying firms that are able to really manipulate the government and have all of these bailouts that go their way and all the money that gets channeled in this way. And this right here essentially saying that the pharmaceutical industry spent $116 million lobbying to bar Medicare from bargaining for competitive drug prices. And if they did so, it would save $90 billion a year for prescriptions. That's incredible to think about, just as one example. You can read this for yourself. It is very interesting. And this is what I have been talking about since October, let's say, because I know that off the top of my head in the video on my main channel page where I talked about Saudi Arabia and the oil price. Out of the Telegraph, this here is one of Saudi Arabia's most respected oil officials and an advisor to the country's petroleum minister. Okay, right here, he's being interviewed, and he says this: I do not believe that the fundamentals of supply and demand justified the sudden and rapid price fall during the second half of last year. This is exactly what I have been saying ever since. The market was balanced and commercial stocks were within their normal range. Yes, supply was starting to increase, but the demand remained strong and there was not a very sudden rise in commercial stocks. I believe the price fall can be cut down to expectation and speculation. It was not about the fundamentals, and that's absolutely obvious when you look at it, because you have to figure, now you have all of this production that's been increasing month over month over month, and did they not look at those indicators at all of a sudden it just began to decline so rapidly. And that has nothing to do with the supply and demand. It can have some effect on it, and it would stop rising and it would perhaps decline a bit, but to have such a rapid fall because of the supply and demand, no, that's not true. And here we have the Saudi Arabia's most respected oil official talking about that, something that I had really went on record here from back in October 2014. If you found this video informative, please give me a thumbs up. You got to be a subscriber on the channel here. We're headed towards now 18,000 subscribers. Hello to every single one of you. I'm trying to reply to all the emails. I only have a handful left in there. I have so many comments to get back to. They're just pouring in, and I'm trying to get back to everybody. If not, you can always email me. I will always reply to the emails. The comments are being very, very difficult to get to these days, but I try to do what I can, and I really appreciate all of the comments. I do read them, and of course, I appreciate all the thumbs up and all of that. If you're not already, you need to be an insider. That's where I give out all my best intel for free, and that's available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.